Well, friends, good morning. Tigandar Rana here. So, the product of the day is Honey Bee Insurance. Honey Bee Insurance. All accidental losses or damage to the beehive or colony are covered. Theft risk can be covered on payment of additional premium. So, under this policy, all accidental losses or damages to the beehive or bee colony are covered. Theft risk can be covered on payment of additional premium. So, as far as the valuation of the policy is concerned, an agreed valuation on the basis of the figures given by the board, village board, maybe the Khadian village board, has been adopted for a specific scheme initially introduced. However, the respective state Khadi and village board or Khadi and village industries commissions should be approached for proper valuation, because the valuation is normally done by the Khadi and village industries boards. Also, it does not cover the loss of production or theft, which can, however, be included on payment of an additional PM. So, for identification, the respective boxes should be identified with the company code and number, because the identification is must. And as far as claim is concerned, this is subject to submission of a proper claim form indicating the cause of loss, the date of loss, and the value of salvage, if any, of the affected honey bees hive or honey bees colony. As far as the applicability of honeybee policy is concerned, hives and or bee colony belonging to the cooperative societies are normally insured, and in the scope of cover, all accidental losses or damages to the hive or bee colony is covered, but theft risk can be covered on the payment of an additional premium only. So, as far as rate of premium is concerned, it is 3 to 4% on total insured value per annum. Since theft can be covered on payment of an additional premium, that could be 2% minimum premium, is rupees 10 per policy per annum. Now, among the important exclusions of the policy, you will find loss of production is excluded, malicious or willful destruction of the beehive is excluded, theft, clandestine sale or loss of the beehive is excluded, neglect or improper management or rough handling is also not covered, and the liability is shared in the 80-20 ratio, because the insurer will bear 80% of the assessed amount and the insured will bear the balance 20%. Or in other words, you can say 20% of the assessed amount would be deducted as the compulsory excess. because the insurer will bear only 80% of the assessed amount. As far as claim procedure is concerned, this is very simple. Because submission of completed claim form with mortality certificate issued by an authorized appraised giving details of the cause and extent of loss. Assessment of loss will be as per certificate given by an authorized officer from the concerned government department. But the most important thing is a specimen valuation, because the cost of hive and 10 frames ISI hive teak would be 140 rupees. 8 frames ISI hive teak 120 rupees. 8 frames ISI hive Punnai contributes 70 rupees. 7 frames Janta Punnai wood 40 rupees. 7 frames in packing wood 20 rupees. But the cost of bee colony would differ. This is 50 rupees for 10 frames ISI hive. Similar 50 for 8 frames ISI hive. And for all remaining 8 frames ISI hive or 7 frames ISI hive or 7 frames in packing wood, the 50 rupees cost of beehive colony will remain. Total insured value for 10 frames 190, 8 frames 170, 8 frames ISI hive only contributes 120, 7 frames Punnai wood 90 and 7 frames in packing wood 70. But this specimen valuation table is only a specimen, because these rates have gone up in multiples. So these rates have increased today a lot. But there is no change in the cover, because all accidental losses or damage to the hive or bee colony are still covered. Theft risk was neither covered that time nor today, because this is covered on the payment of an additional premium. The rate normally varies 3 to 4% of total insured value. For theft, an extra premium can be charged. Rate may differ company to company also. But the company doesn't prefer to cover the loss of production, malicious or willful destruction of the beehive, theft, clandestine sale or loss of the beehive, neglect or improper management and rough handling of the beehive. So these are certain exclusions which companies want always in their policy, because the liability of the policy, or you can say liability under the policy, is shared on 80-20 basis. Insurer will bear only 80% of the assessed amount and the insured will bear the balance 20%. That is the way the liability shall be divided, and the hive and or bee colony belonging to the cooperative societies are the preferred risk. Certain companies provide this cover only to the societies only, cooperative societies only. But the insurer may provide the cover to the individuals also, because honeybee insurance is common at certain places and there the coverage is required. The only thing is sum insured or the specimen valuation has to be done on the basis of the cost of hive or cost of bee colony. It could be in 10 frames, 8 frames, 7 frames. It could be on the teak basis, Ponnai country board basis, Ponnai board basis, or frames and packing board basis. Because these are required for honeybee colony. So this is honeybee insurance provided by the general insurers. PSUs are providing, and certain private companies are also providing this insurance policy. Thank you very much.